What is going on out there, good people? And welcome back to LMD Trading, where I am living my dream trading. I hope everybody out there is doing well as we come up on Christmas. As for myself, I'm doing good. Just sitting down at the desk, and I was looking at my M1 Finance account, and I figured it would be a perfect time to take a look at it and get a video done showing where we are at as we close out the year. I do these videos on the long-term side, more so for the younger generation, because I wasn't really informed on the importance of long-term investing when I was in my 20s. It wasn't as easy back then. I say that like I'm old, but that was 30 years ago. It wasn't as easy to really get into long-term investing. You basically had to go through companies. You didn't have the opportunity to be able to pick and choose what you wanted to invest in and get in and out of positions as easy as you do now. And they make it to where it's right there in your fingertips on your cell phone. And one of those apps is M1 Finance. I have been using M1 Finance since March of 2022. And with this app, you can pick the stocks or the index funds that you want to trade. You pick how much money you want to go into them daily, weekly, monthly, however you want to set it up. You can tell it, okay, I'm a young 16, 17-year-old or 18-year-old. I can only afford $25 a week. Start putting that $25 a week. Eventually, you can start increasing that. This particular account, I think I'm doing $100 a week. It's not really my primary long-term investing account. I opened up this account because another person on YouTube had mentioned it. And I looked at it and I was like, okay, this is pretty cool. I don't have to buy full shares. You can do fractional shares, and you just slowly can start accumulating and building that account up. So today, we're going to make this video. This will be closing out the year of 2023. I did a video 6 months ago, so it's a perfect time to get this one out of the way. And then I did one at the beginning of the year. So what I'm going to do, I'm going to switch on over. And I have already pulled up the video that I did 6 months ago. So if you notice, 6 months ago, revisiting the long-term account, and basically saying it was almost a year ago. So right now we're at the intro. I'm gonna go ahead and start this. Somebody mentioned in another YouTube channel that I watch. So I ended up just kind of reiterating what I was saying, but I'm gonna fast forward this real quick, and I'm gonna pull up just set up his M1 Finance where it is now. Videos, and I'm gonna just do so. This amount right here was called "The Stock Market is Falling." $1,554. Investing now. This video was recorded 11 months ago. So that would have been a year and a half ago. This account had 1,550. And I hate that it does not really show the it doesn't show the date that this was recorded. But at that time, $1,554. So I'm gonna scroll up. We're gonna get to where it was at 6 months ago. Then we're gonna take a look at it. Our investment. I'm gonna start this video and let it play for about 3 minutes. So let's see here. Come on, keep going. There we go. So, and I just want, I'm gonna blow this up real quick. Amazon was green. So you see at that time, just kind of giving some numbers, just showing where each particular stock or index. And this one, I just have S&P 500. The rest of them are actual stocks. These four right here had pumped us back up and got us green. Again, we're not worried about the short. So this was 6 months ago. When you are long-term investing, you can't. I'm gonna go ahead and fast forward through here. But if you look at that time in this particular video, the account was red. We were down 20% in this account, which equated to $245. Let's look and see where we are at today. Now we're about to see where it was at 6 months ago. 6 months ago would have been June, July time frame. So now, 6 months ago, 22, or actually, I'm sorry. There we go. This is 6 months ago. That last one was a year ago. This is 6 months ago. We're up 5,000, or not up, but the account balance is $5,810.06. We're up 8.75%, which equates to $289. But I had made a video talking about I was going to open an account for my grandkids. And now you see it. But this here still is only $100 every week that I'm putting into the account. So since March 2023, we have $5,810 in that account 6 months ago from today. And during that video, I just kind of explained you got the market gain, what you make off of the actual shares, and then you have earned dividend, which you make regardless of if the stock is going up or down. This is what you could retire off of. But I'm going to go ahead and I'm going to scroll this up just so we can look and see what the individual stocks were doing. So there we go. Let's let this thing get back in focus. Let's bump that up so we can see it. There we go. As you can see, at that time, we had a couple of them red. Amazon was red. ABBV was red. Disney was red. Tesla was red. Rest of them green. And that's where we were able to kind of get back green overall. So what I'm going to do now is I'm going to pause that since we have a baseline. Let's just back it up. Just so it's showing where we were at overall. So 5810.06. 6 months ago, we were up 8%, 8.75, and that equated to a $289.99 gain. So now I'll switch over to my actual factual account right now. And that account today, December 23rd, has $9,449.33. We are up 28.87%. And it equates to $1,228.31. That is putting $100 per week into this account. $100 a week. I don't think that's that much, For some young people, that might be. But for those people that's in my age range or in their 40s, in their 30s that don't have a long-term investing account, you just put money in your checking account, maybe putting it into a standard savings account. You could be putting minimum of $100 a week over into a long-term investing account, and 10 years from now, what could this number be at? This is from March 2023. So, I'm sorry, March 2022. In 3 months, it'll be 2 years that I started this account. We say that it's long term, minimum 5 years, but you want to see it at least 10, 20 years. I'm 50. 10 years from me, it'd make me 62. Also, if you went back, watched some of my other videos, or even just in that little small snippet, I had mentioned that I had started an account for my grandkids. At that time, my grandson was 6. Said 10 years from then, he'll be 16. He may be wanting a car. Let's look and see where that account is at right now. So, long term, this was the original account that I started. It's at $7,091.82. It's up 25%. But the account that I started for my grands, this is not even a year old, I don't think. It's at 23.57.51. 10 years. This would be a nice little chunk of change for a used car. When I was 16, $2,300 would have bought a nice little hoopty. That would have bought a decent little hoopty to get around in. But we still have 10 years to go on that. And that account is up 18%. So you can see that it does not take a lot of money to grow your money. The actual market gains, you don't see this until you actually sell something. But that right there, dividends earned, this is what you have actually made. This is what this account has actually made. And I just reinvest this money. I reinvest that money back into whatever the share is, whatever the stock is. And like I said, this account started March 28, 2022, $505. Here we are, December 23rd, 2023. We're at 94.49.33. That's the power of long-term investing. But let's look and see where the individual stocks were at. And what I'm going to do, I'm going to go back and I'm going to just see if I can kind of, it's going to somewhat block it. I don't want to block it. Let me see. Let me figure out how I can do this. But just so we can kind of look at where the market is at today. So let me screenshot that. Probably should have did this before I started, but it won't take long. Do that. I'm going to crop. And I am going to just remove and crop that. I'll do that. And there we go. Yep, that's perfect. That is what I was trying to do. Because now I can drag this and put it right there. And we can somewhat compare apples to actual apples. So I'm going to sort this like that. I'm going to bring that back up. Oh, I can't click it. Let's do that. Can I keep this on top? Nope, it's not going to let me click it on top. So I can't click over here, but that's fine. ABBV, 6 months ago, we were red 8.55%. Today, we are up 16.49%. Then 20% of our pie was going towards ABBV. Now only 15% is going towards that. And that's going to be because I added something. As we go down, we'll see. We'll see what I added. AMD was up 52%. AMD has been a banger. Had 5% going. Right now, it's at 88.26%. It's almost up 100%. We're still doing 5%. Google, this is the new one. I was not trading Google 6 months ago. Just recently added it. It's up 15%, and we have 5% being allocated towards that. Amazon was down 4.72%. Today it's up 22%. We got 10%. That hadn't changed. Apple was up 24%, 24.31. Today it's up 30%. We still got 15% going there. This is the, we got two of them that are just still pretty much the same as well. We got Disney. Disney at that time was down 15%. Today it's down 5.98%. Still putting 5% there. This is one that I am probably going to sell when it gets green. I'll sell these shares. It's going to take $340 and I'll allocate it across the rest of what I have in the portfolio. Intel was at 30.58% 6 months ago. Today, it's up 86.36%, almost at 100%. It's running right there with AMD. Chip stocks are killing right now. I don't have NVDA in my portfolio, but it is killing as well. Was putting 5% in back then. We still doing 5% today. SPY, top 500 companies that the S&P has in it. 14.18% back then, 6 months ago. Today it's at 26.17, doing 15% in there, which is still the same. Tesla was down 1.48%. Not much change. It's down 2.22%, and we were doing 10%. Still doing 10. I cut off Home Depot, but let me see if I can scroll it up. So back then, Home Depot was at 3.16%. Today, it's at 32.63%. So as you can see, these have all grown. They have all moved higher. The market right now is sitting right at all-time highs. So think about when I had first made my first video, y'all, talking about long-term investing. When the market, it was coming out of the bottom. Had you started long-term investing then, man. And I always say, like, I hate that I didn't get into it during COVID times when it was rock bottom. But the market gave us an opportunity to jump in, and dollar cost averaging, it's never too late, because even though the market right now is sitting near all-time highs, let's say that you bought today and it's at, let's keep it easy numbers, $10 a share, and you buy one share. And then next week, the market goes down and it's $5 a share, and you buy one share. So now you have two shares worth $15. You paid 10 for one, you paid 5 for the other. Your average cost is $7.50 a share. The next week, it might still be $5. You buy another share, and you constantly are adjusting your price because you dollar cost averaging in. So when the market goes down, you dollar cost average in on the way down. And when the market goes back up again, you just dollar cost average when it goes back up again. This is my graph showing since March of, and actually it doesn't go all the way back to March. It only goes back to August 1st, 2022. But it just shows you what the market does. And I mentioned it in another video. One of my mentors who does not know he's my mentor, Jared, over at Live Traders, what he said is the day that the market goes down and it never comes back, we got bigger fish to fry. You're not going to need this money. You're going to need other things. But this chart just shows you what the market does. And this is my account. You get pullbacks. I bought right there. It went up. I bought it. I bought it on this peak. It consolidated. I bought all through here because I'm buying every week. Pulled back a little bit. Took off again. Pulled back a little bit. I'm buying in that little dip. Came up to here. I'm buying right there. So the thing with long-term investing is you can't just buy today and let it sit. It will grow. Don't get it wrong. Just because of the way that the market is, it will grow. But where you get the best bang for the buck is to dollar cost average in either weekly, either every 2 weeks, every month, however you can set your account up. Most people get paid bi-weekly. You can set it to where if you get paid on a Friday, you can have it to buy stocks on a Monday. I have mine buy every Monday. It's showing Tuesday here because Monday is a holiday. But every Monday morning at 9:30 when the market opens, it takes my $100. It splits it up based on how I have my pie split up. This is 100%. So easy numbers. It's going to buy $15 worth of ABBV. It's going to buy $5 worth of AMD. It's going to buy $5 worth of Google. Google might be at, what's Google per share? $141 a share. This price right here makes people think that they can't afford Google. But being able to fractionally buy it, meaning you can buy a fraction of a share, this lets you play the game. This lets you buy shares and be able to become a shareholder in these companies that the stocks might be $200-$300 a share right now. And I just started buying Google not long ago. I got 2.6 shares right now. Those are my shares. Let's take a look. Let's see. Let's look at ABBV. How many shares we got of that one? ABBV is $154 a share. I got 8.4 shares. So I am doing good. And this tells you right here, my average cost is $146 per share. So I'm making right at about $8 a share off of those. And this is not a sprint. This is long term. So we are looking to have these for long term. Now, the SPY is expensive. Let's look at the SPY. SPY, $473 a share. I got 2.21 shares and my average price per share is $412. Again, you can long-term invest in TD Ameritrade or these other brokers, but they don't let you fractionally buy. So if you want to get into the SPY, you got to come up with $473 and you got to spend all of that on one share. Whereas with M1, you can take and put whatever amount that you want. $25 a week, $50 a week, $100 a week, $25 every 2 weeks. again, I say this for the young people. Young people, whatever you can afford, open up an account and start building wealth. That's what this is. This is wealth. This here will make you wealthy 10 years from now. Just like I said, this account, 2 years, in 2 years is sitting right at about 9 grand. Do the numbers on it. And it's almost at 10 grand. In 10 years, this account will be well over 100 grand. You as a young person, 20, 30 years with compounding, your money compounding on top of itself, that account easily can be $600,000-$700,000. And as a young person, as you get older, your income is going to grow. That means that you could put more money into that account. So hope y'all enjoyed this quick video just showing where the long-term account is at today. I'm not going to change it because, like I said, this is just one of the accounts that I long-term invest in. So I'm going to just keep on plugging away, putting that $100 a month in there. And in 6 months, we'll check and see where we at again. June, July. We'll take a look. We'll see. We'll see if the market had a pullback. We'll see if the market had a higher move. But that there is a good representation of what the market does. Sometimes pullbacks are a little longer. Myself, Vega, one of the guys that hang out in the Discord, we upset that the market is doing this right here. We are upset that the market is at all-time highs right now because I wanted to buy when the market was still dipping. I wanted to buy some stocks and get a discount. That's what it's all about when you long-term investing. You want to rack up when the market is low, because that's what they say. You buy low and you sell high. Right now it's high. Right now would be the time for me to actually be trying to sell because it's up. But no, I'm trying to ride this thing till it's way over there 10 years from now. And this thing is, like I said, sitting at like $100,000. That's what I'm looking for. But on that note, thanks for checking me out. As always, if you have not hit that like button, now would be an excellent time. If you're not subscribed, please think about subscribing. And as always, we can continue the conversation in the comments. I'll drop a fresh link down in the description for M1 Finance just to make it easy for anybody that's interested. If you know some young people, 18, 19 years old, pimp them the game, as we used to hear back in the day when I was a young person. Somebody tell me, let me pimp you the game. Pimp them to game, meaning tell them, like, dude, you won't miss $25 a week. You won't miss $50 a week as your income grows. That's lunch. That's like missing lunch 2 days out the week. Pack you up a bologna sandwich and a bag of chips and let that money work for you. On that note, I'm going to wrap this one up and we'll be back at it again next week. Peace.